Hello everyone. Today is 17th October and let's start Paripurna discussion. Today also we are going to discuss 7 important articles in which the first is about the Mercosur, second Bharatpol portal, third carbon border adjustment mechanism, fourth is on CBDC, fifth is state mining readiness index, sixth different types of trade agreement, and the last seventh article would be on the restoring fiscal space for the state. So these are the 7 articles we are going to discuss today. So let's start with the first article, that is the Mercosur. Now first of all, this is why it is in the news, what it is, and how it is important for our UPSC examination, that we are going to see today. First, let's understand the context. The context is that recently India and Brazil have reaffirmed that in the meeting, they have reaffirmed that they will strengthen their relationship, that is the India's relationship with Mercosur. Now, we need to understand what this Mercosur is, and this particular topic is important for the international relation questions in the prelims. What kind of questions can be asked? It can be asked like which among the following countries are member of Mercosur. So that can be one of the question. Second, in the mains also in GS2 international relation, question can be asked India Mercosur relation, right? So that way this topic becomes very important for the prelims as well as for the mains. Now let's understand about this Mercosur. Okay. Now, first thing we need to know is that Mercosur is the union of different countries, right? So from this map, you must have identified that this is the trade union, and the trade organization between the South American countries. Which are the members of this country? Remember, Brazil is one of the member. Second, Argentina is one of the member. Uruguay, Paraguay, and Bolivia. These are the 5 members of this organization: Brazil, Argentina, Bolivia, Uruguay, and Paraguay. Please remember, these are the members of Mercosur, right? Now let's understand what is the origin of this particular organization. See, this organization originated in 1991 with the Treaty of Ascension. Treaty of Ascension. In 1991, this particular organization came into the existence. What are the objectives of this particular organization? As usual, this is a trade bloc, right? So their major objective is to promote free trade among the member countries. They want to promote the free trade. Okay, so here the question can be like which among the following countries are the part of the Mercosur. They can give the countries like the Venezuela also, Colombia also, Peru also. However, we need to specifically remember these are the 5 countries which are the member of this particular organization. Now, as you see, this is a block of 5 different countries, and India want to have the trade relation with these countries. So why it is important for India, importance for Indian point of view, it becomes very important in 2 aspects. One is that economic aspect. In economic aspect, we can boost our trade. See, China is already having a huge investment and the huge trade relation with these countries. So India is lagging behind the China. So we can have the trade with this particular country to expand our trade. Second is that we also want to diversify our trade in the wake of recent India-US trade relation, as we have seen that the tariffs have been imposed. So we also want to diversify our trade markets. So this can, in that sense also, this particular Mercosur can be very, very important. So to diversify our business, diversify our export, also very important. Second, it is also important from the geopolitical point of view. Geopolitical point of view, it is important as it is important for the south south cooperation. As you know that India wants to be a leader in the for the global south, right? So as you know, one of the initiative is that the voice of global south initiative. Global south initiative is one of the initiative of India to promote the south south cooperation, right? So this way you see this Mercosur is very very important for India's point of view also. So these are the different aspects of this particular article. Let's go to the next article, that is the Bharatpol portal. Bharatpol portal. Now, what is the context? The context for this particular article is that Honorable Home Minister Amit Shah have said that there is need for the better coordination to bring fugitive back to India. For example, fugitives like Vijay Mallya, Nirav Modi, these kind of fugitives who took the financial benefit of India and went away from India, right? So we need to have a better coordination to bring them back. Now, coordination with whom? The coordination with other country or organization, coordination within our country between the different organizations, such kind of coordination is required, right? So within this for this particular article, from our exam point of view, two things is important. One is that we need to know what is this Bharatpol. Second, I'll tell you. First, let's cover this what is this Bharatpol? See, this Bharatpol is nothing but a digital platform. It's a digital platform. Now, what this digital platform does? This digital platform brings together different organizations within India, law enforcement institution present within the India to a single platform, so that we can facilitate better coordination. In which dimension, which areas this particular platform will work? This platform will work in areas like terrorism, tackle terrorism, transnational organized crime. What is organized crime? Organized crime, you must have heard about the Dawood Ibrahim, right? D Company, for example, D Company. These are the well established what you can say, the organization who carry out the illegal activities mostly in order to achieve the financial gains and other kind of economic offenses like money laundering, economic offenses. So these are the areas of focus of this particular platform, that is the Bharatpol. Along with this Bharatpol, there is at the international level, we have another organization called as the Interpol. You must have heard this word, Interpol. Interpol is the international police. The full form is the international police. Basically, it coordinates with the different countries' police and the investigation organization to prevent the transnational and the global level the law and order issues. Now, in India, CBI, that is the Central Bureau of Investigation, is the nodal agency to have the coordination with the Interpol. Interpol is popular for their notices. They release the different color notices to the different country in order to have the smooth investigation and the law enforcement. So they have the different color notices. What are those color notices? Let's see those color notices. As you see, Interpol notices. The first is the red notice. It is released to highlight about the any wanted person. Wanted person means that any person who is wanted for the prosecution or to serve for the for sentence, such kind for such purposes, red corner notice is released. The yellow notice is released to identify for the missing person, especially for the minor children, if anyone is missing. Blue notice is released to get the additional information of that particular criminal or the person. Black notice is for the unidentified bodies, which there is no information about the body. Green notice is released to have the warning and a kind of intelligence is received, so green notice is released like the to warn the other country. Orange notice is to imminent threat, any kind of threat which is about to come, so this is released. Then the purple notice is the to aware about the modus operandi. What is modus operandi? It is the method which is followed by the criminals to carry out their crime. So these are the 7 different color notices released by whom? Interpol, to enforce and to process their anti-crime activities. Okay, so this was the article related to the Interpol and the Bharatpol. Next article is about the carbon border adjustment mechanism. This is very important article, carbon border adjustment mechanism. Why it is in the news? The context is that Indian exporters, especially iron and steel, are projected to face heavy levy under the EU's new carbon tax. From here you must have understood. Let's understand this more clearly. Okay, let's understand what is this carbon border adjustment mechanism. It's also called as the carbon tax. Now what it is? Understand carefully. Okay, see, there is a country, let's understand, there is a country A. Now this country is putting a lot of restriction on the companies who are present in the country A with respect to the carbon emission. Let's say any company who is emitting the carbon, they are imposing higher tax on that particular company, or they are banning the companies who are emitting the carbon. Why? In order to promote what? Green economy, right? So they are imposing the carbon tax on the companies which are producing here, right? So now if there is one company X who used to produce here, now what they will do? They will try to shift to another country. Let's say the another country is B. So this company A will see that this A country is imposing a lot of tax on us in the name of carbon emission. So let's transfer our business from A to B country. Why? Because B is not imposing any tax with respect to the carbon emission. So here the cost of production and the tax will be less, so their products will be cheap, right? Here the product will be costly. Now if they will export from this to other country, their product will already be costly. However, if they export from B, their product will be cheaper because here tax is not levied, right? So now what this company A will do? Now the company A will think like this is not good. Like now this company B who is exporting to company A the cheaper good, right? They are not imposed. B has not applied any kind of tax on the goods produced in B. So this will be cheaper. However, the same product in the country A will be the costly. Now here what country A will do? They will impose here the tax, carbon border adjustment mechanism. Basically at the border they will adjust for what? For the carbon. For example, let's take an example. Let's say here if a company Y who is producing a product at let's say at the $75. However, at B, the same company, the another company at the country B, they are producing at $40. Now they will export it to the company to the country A. So this country, what they will do? They will apply here the $35 $35 they will apply, so that the total price of the product will become how much? $75. So now the both prices are same. So what they are doing is that they are adjusting the price for the carbon. So this is called as the carbon tax or carbon border adjustment mechanism. Okay, understood the concept? Now this has been imposed by whom? Who have imposed this? This is being planned by the European Union, and they are planning to impose it from the January 2026. Now what would be the impact? This is going to be the huge impact on countries like India, because our export now will become very costly. Now these kind of taxes are going to be imposed on the sectors. Which kind of sectors will come under this taxation radar? The sectors like steel, aluminium, and other, like mentioned here, like the electricity, fertilizer. These sectors will come under this radar. What is the stand of India? Stand of India. India is oppose this particular tax, and they said these are the form of non-tariff barriers. What are the non-tariff barriers? Non-tariff barriers are nothing but non-tax restriction, like the import quota, which are not in the form of tax, but also it restricts the trade, right? It restricts the import or the export. Such kind of the restrictions are called as the non-tariff restriction. So India have opposed this kind of tax. Okay. However, European Union have justified it by saying that it is to promote the green technology, it is to promote the carbon, to tackle the climate change. So that way they are trying to justify. However, countries like India are calling it as unjustified. Here another term is that is called as the carbon leakage. Carbon leakage is nothing but like when the countries shift their production from one country to another to avoid the carbon tax. For example, in this case, the X have shifted their production from A to B in order to avoid the carbon tax in country A. This is called as the carbon leakage. This is called as the carbon leakage. Okay, so this was the article about the carbon border adjustment mechanism. Now let's go to the next article, that is the promotion of CBDC over the stable coin as said by the RBI governor. Here there is small mistake, not Saktikanta sir. Now we have the Malhotra sir is the new RBI governor. Malhotra sir have said this, that RBI governor Malhotra sir have said that the CBDC should be prioritized over the stablecoin. Now before going into this article, we need to understand these concepts, like what is mean of CBDC, what is mean of the stablecoin. And before that also, let's first understand what is the cryptocurrency. So let's understand first the key terminologies here. What is first the cryptocurrency? The currency which is produced through cryptography. The coins or the currency produced through cryptography. Cryptography, as you know, which is produced through the blockchain technology. It is nothing but in the blockchain we through the different the block mining activity, that is the term is called as the mining, Bitcoin mining. That is by solving different algorithms. Algorithm solving leads to the generation of Bitcoin or the cryptographic coins. So that way the cryptocurrencies are generated. The feature of this currency is that these are highly decentralized. decentralized, and there is no control of authorities, that authorities cannot control it. So that is the major issue here. So even the terrorist can have the transaction over it, and the organization like RBI cannot have the control over it. So that is the major problem with the cryptocurrency. The alternative of the cryptocurrency came in the form of stable coin. As I said in the previous, in the cryptocurrency, the problem is that it is decentralized and there is no control of authority, as well as there is no control of like the flow of this value of the Bitcoin. Sometimes it will reach to 20,000 per Bitcoin, or 1 lakh also, or sometimes it will come very low also. So it is highly volatile also. This is highly volatile. So to bring the stability in this cryptocurrency, so cryptocurrency plus stability is called as the stable coin. You can easily understand that. Now how this stability is brought? The stability is brought by pegging cryptocurrency with a fiat currency or gold or any other asset. Okay, so we peg it. For example, the cryptocurrency like the Tether, an example is Tether is example which is pegged at US dollar. It is pegged with the US dollar. So some pegging means what? We have linked the cryptocurrency with the US dollar in order to bring some level of stability. Okay, so these kind of coins are called as the stable coins. This is also a type of cryptocurrency, but just that we have pegged it with one fiat currency or the gold. Now here, what is fiat currency? Fiat currency is such currency which is backed by government, which do not have any physical backing. It is not backed by any physical asset backing. For example, gold, it's not like the 1 lakh crore rupee have been printed by RBI, so the RBI is having 1 lakh crore rupees of gold. No, there is no physical backing. It is based on the trust of the people over the government. So that kind of currency is called as the fiat currency. Now the third type of currency here is called as the CBDC. What is CBDC? This is, the full form is the central bank digital currency. It is nothing but the digital form of currency. This is digital form of currency. Like now, if you are having the 500 rupee of note, same 500 rupee of note can be kept in the digital form, right? It can be kept at the digital form. Now how it is different than the stable coin? Definitely it's different in the form that it's not based on the cryptocurrency. Here the RBI or the central bank will be having the control over it. Next point is that this is backed by the government, that is the central bank backs it, that is they have the liability over it. It's same like our currency, just in the digital form. Now you can ask, like, then how it is different than UPI? It is different in from the UPI is that for the UPI transaction you need the intermediate, right? You need the bank to transfer it. But to transfer the CBDC, you don't need any intermediate. You can directly transfer from peer to peer. Like in the UPI, in order to transfer from you to your friend, there is a requirement of bank through which it will go, right? But in the case of CBDC, that bank requirement won't be there. It is like, for example, if you want to give 500 rupees to your friend in the form of cash, do you need anyone in between you? Not required. Like you directly give the 500 rupees cash. But here in the CBDC, you directly transfer it. There is no requirement of the bank. However, in the UPI, there is the requirement of bank. So that way, these are the different types of coins. And RBI governor have said that we should give the preference to the CBDC. Why? Because of there is backing of the government, more stability, more predictability, so it will bring the fiscal the more macroeconomic stability, the volatility will be less, the transaction of black money will be less, so that way this can be the more suitable mechanism of financial transactions. Let's go to the next article. Next article is the State Mining Readiness Index. See, whenever any question is, any topic is related to the index, here two things becomes very important. One is that who releases this index. Second, what are the indicators or dimension. And third aspect is the ranking. Sometimes, but this ranking is not that important. However, the first two are very important to know, like the who releases this particular State Mining Readiness Index. They can confuse us with Niti Aayog or some other organization. So we need to remember this is nothing but the Ministry of Mining. Ministry of Mining releases this particular index. Second thing is that what are the indicators of State Mining Readiness Index. There are four main pillars are there. First is that regulatory framework. Second is mineral administration. Third is technical expertise. And fourth is sustainability. Based on these four pillars, different states would be ranked. Now, there are the different categories in which the different states would be kept. Now, the ranking has not been this is not very important. Now, if you see that the ranking has been released, for example, Madhya Pradesh, Rajasthan has been kept under the category A, high mineral endowment. Category B, like the Goa, Uttar Pradesh, had been kept as the moderate mineral endowment. Like that, they have kept. But this much detail for this particular index, we cannot remember. This is not the major index like the SDG India index or such other index can be the important, but this is the recent one and the small one. Remembering ranking would be very difficult, so let's not go into that part. Just we need to remember who releases. Now, what would be the objective? What objectives are similar, like to promote the competition among the different states in order to promote the mining, in order to see that which states are promoting more mining and progressing more, which states are lagging behind. That kind of to promote such activities, this particular index has been released. Next article is the types of trade agreement. The concept is the types of trade agreement. There are different types of trade agreement. This is in the news because recently you must have heard that India is trying to sign free trade agreement with a lot of country. See, the trade agreement, first of all, let's understand what's this trade agreement. See, in the trade agreement, the countries try to, the major objective is to have the smooth trade with the other countries. Now, how can they have the smooth trade? They can have the smooth trade if the barriers are less. Now, what kind of barrier there can be? There can be two major types of barrier. One is called as the tariff barrier. Second is called as the non-tariff barriers. Now, tariff barrier are the form of tax. For example, you have seen that there is 50% additional tariff on Indian products by the US. Non-tariff barriers are not in the form of tax but some other form. For example, technical aspects. They can say that if a product is having this much composition of this particular constituent, then only we can purchase. If this particular mango, for example, in the Indian mango, Alfonso mango was rejected by the European Union by citing that Indian mango is having a particular chemical more than the prescribed limit, so that's why we don't want to purchase it. So that kind of tariff is called as the non-tariff, or that kind of barrier is called as the non-tariff barrier. So in the trade agreement, countries try to reduce this kind of barriers so that they can have the more smooth trade among them. For example, recent India EU trade agreement, India Europe Australia trade agreement, we are negotiating with the European Union, negotiating with the Canada, even the USA, right? So that's why this particular aspect is highly in the news. So in today's article we'll discuss like what are the different types of trade agreements which are in the news and which is generally followed. From this image also you can understand here that there are majorly 6 different types of trade agreement. First, PTA, that is the preferential trade agreement. Preferential trade agreement. Preferential trade agreement, here we have one positive list. Positive list, that positive list means like these are the areas or the products, or you can say that the segments where the tariffs will be reduced. So this is very lowest level of trade agreement, where we decide, okay, these are the list where we will reduce the tariff, right? Next is the free trade agreement. Here we have the negative list. This is more comprehensive than the preferential trade agreement. In the free trade agreement, we have the more comprehensive. Here we have the negative list. Negative list, if you have covered my previous lecture, there I have explained about the negative list we had, especially when we are dealing with the other country. For example, the dairy sector, agriculture sector, these are usually kept in the negative list. We don't want to reduce the tariff in these particular sectors in order to protect our farmers from the import from the other countries, right? So we make the negative list. Okay, we are reducing tariff from other products, all commodities, but not in these commodities like the agricultural products, dairy products, or other such products, in order to protect our producers, right? So that is called as the free negative list. Okay, this is called as the negative list. Next is KECA, Comprehensive Economic Cooperation Agreement. There is another variant of it that is called as the KEPA, Comprehensive Economic Partnership Agreement. Now what are these? These are the more advanced version of FTA. Now here we not only see the goods, we also include the services, we also include the investments. Okay, so that way it is more comprehensive. We are not only talking about, okay, goods we will reduce it. No, we are also talking about in the services also we will reduce the tariffs. We will facilitate the investment from your country to our country, our country to your country. We have the comprehensive economic partnership with Japan, right? Next is the custom union. Custom union is the next level in which the duty we make it zero among the member country. The second aspect is that we have the common tariff for the other country who is participating in trade with our country. Suppose let's say the India, Bangladesh, Nepal, these have made one custom union. Now among them they won't have any tariff, they will make it zero. Secondly, they will have the common tariff for other country. That means if let's say the China wants to have trade with Bangladesh or in this union, they will be applying the same kind of tariff. India, Bangladesh, Nepal, they will apply the same amount of tariff with the other country. That's called as the custom union. Next is the common market. Common market is the next deeper level of integration. Here, in addition to the goods, service, investment, even the labor cooperation, that is the labor movement, even the investment, technical standards are also harmonized. Similar technical standards are followed. Lastly, the economic market. Here even the common currency is followed. Common currency, common economic policy, fiscal policy, common standards, common monetary policy are followed. The classic example is the European Union. Okay, so these are the 7 different types of, you can say that, the trade agreements which are followed by the countries in order to facilitate the trade. Let's go to the next article, that is the restoring fiscal space for the state. This is the main specific article. This article is based on the Hindu article written by the K. Shanmugam. K. Shanmugam have written this article, and based on this we will try to understand this particular article. This is important from the GS3 economy point of view. GS3 economy. Now why it is the news is that the context is that recently you have seen that there is reform in GST, and this reform has been brought by the government through the GST Council. The second aspect is that the government have abolished the GST compensation cess. Now what is this? Let's understand the background of it. When GST brought, what GST did? GST abolished the indirect taxes. Many of the indirect taxes, and that was merged in GST. Previously, different states also used to impose their indirect taxes, so they had some certain of autonomy, how much tax to apply. So they had their independent revenue sources. Now what happened that that kind of taxes were integrated under the GST. Now the states cannot make independent decision on how much tax to levy. That means their revenue autonomy was limited by the GST. Now all GST decisions are taken by the GST Council. The states do not have the independent autonomy with respect to the GST, right? Now initially when GST was introduced, states complained that it will lead to reduction in our revenue. So the government decided we will compensate it. Central government said we will compensate it, whatever revenue loss you will have. Now how the central government will compensate? Central government started imposing GST compensation cess on the luxurious products. From this cess, whatever revenue the central government will get, this revenue will be used to compensate the states. You understood? So states were happy that okay, we are getting the compensation of whatever loss we are having. However, now the state saying that the central have abolished it, so states will not be able to get that compensation now. So that is the major issue for the states now. Okay, so this is the context. In this article, different issues between the center and state, especially from the financial and the taxation aspect, has been discussed. This is also important in GS2. In the GS2, we have the financial relations, right? In the part 12. Part 12 talks about the financial relations between the central government and the center and the state, right? Of the constitution, part 12 of the constitution. So there also the issues are asked sometimes by the UPSC. So let's discuss the different issues between the center and state with respect to the fiscal aspect. Issue number 1. The first is the fiscal asymmetry. What is fiscal asymmetry means? Asymmetry means not similar, right? The symmetry is not there between whom? But between the center and the state. Center have more power, more fiscal power than the states. They have the more autonomy. Okay. For example, before GST and even now, the center collected around 67% of the total tax revenue. However, the states collected only 33% of it. That's the first point. That is the more centralized revenue. More center is having the more taxation power, more tax collection. However, if you see the expenditure, states have the major responsibility of expenditure like law and order, health, education. So writer says that the states have the more expenditure responsibility. However, center have the more taxation responsibility, or you can say the power, that as per the writer. The second is the erosion of autonomy, as we have already discussed. For example, in the case of GST Council have taken away the autonomy to impose the indirect tax, and in GST Council central government have the major power. So that way the power to impose and have the autonomy over the taxation has reduced. The third aspect of issue is related to the Finance Commission. What is Finance Commission? Finance Commission is the constitutional body constituted under Article 280. And what is the responsibility of Finance Commission? To have the vertical devolution of tax from center to state. That is, to divide whatever taxes collected by the center between the center and state. This is called as the vertical devolution. That is, dividing the proceed. Let's say the 100 crore is collected, how much will be given to the state and how much will be kept by the center. Let's say they have recommended the 40%. Now the 40 crore will be given to the state. Out of this 40 crore, how much will be given to state? Let's say the Tamil Nadu, how much will be given to the Andhra Pradesh, how much will be given to the Uttar Pradesh, how much to the Bihar. This is called as what? Horizontal devolution. That is also decided by the Finance Commission. Now here comes the major issue, that the states like Tamil Nadu complain that states like Bihar are getting more than the Tamil Nadu because of the population criteria. Because Finance Commission decides that the more the population, more will be the money will be given. Definitely there are other criteria too. However, the states like Tamil Nadu, Andhra Pradesh complains that since we have worked on the population control, we have to pay for it. We are getting less money compared to those states who could not control their population. They are getting more. So this is the major issue between the states as well as between the Finance Commission, the complaints of these states to the Finance Commission. Right. The next aspect is the fourth point here is rising cess and surcharge and the declining devolution of fund. The funds are declining. Why? Because the divisible pool of fund is declining. Now what is the divisible pool? Divisible pool of fund or the tax is considered that amount of tax which is to be divided between the center and state. That means if 100 crore is collected by the center, it does not mean that all 100 crore will be divided between the center and state. Now you will say that why not? See, out of these 100 crore, such taxes are removed which do not form the part of the divisible pool. Such taxes are called, for example, cess, surcharge. As per the constitution, the cess and surcharge fund, central government is not obligated to share the proceeds of cess and surcharge with the states. Right? So they are not obliged to share it. So that such amount is not shared with the states. So let's say the 20 crore is in the form of cess and surcharge. So if we subtract this 20 crore, only 80 crore is available to divide between the center and state. So from here what you can understand is that more the cess and surcharge, less will be the divisible pool. Hence, less will be the tax shared with states. Right? So states will get the loss from this. So this is also one of the reason, and recent time we have seen a rise in the cess and surcharge. So this has been the major issue. The next issue is that the high dependency. The fifth aspect is the dependency of states. Dependency of states on center. For what? For the funds. Almost around, on an average, 44% of the revenue is from the center. For example, in the Bihar, 72% of the total revenue is coming from the center. In the Haryana, 20%. So here we see the dependency on the center of the state. Now, if such dependency is there, how the state will function as an independent on the autonomous, you can say, the unit of federalism. As you know, in the federal system, both center and state have the equal power. Now, it can be justified that the India is not truly federal, it is quasi-federal. That means the central have the more power than the state. Still, we know that the federalism is a basic feature of Indian constitution as per the S.R. Bommai case 1994. So, state must have certain level of fiscal autonomy, and center should facilitate to give more power to the state to have their own source of revenue, so that they can reduce their dependency on the state center for their independent decision making. And that way we can promote what? Cooperative fiscal federalism. So this will be the conclusion for you. Okay, so this was the today's article. We have discussed 7 important articles. Thank you so much for today's discussion.